When it comes to investing, there are so many options to consider. But the big question is, which investment plan is right for you? In previous episodes, we've talked about asset classes, the importance of diversification, and the magic of compound interest. If you missed those videos, I highly recommend checking them out before diving into this one. Compound interest is a game changer when it comes to investing, no matter how much you have to invest. Time is a crucial factor in compound interest. The longer your money is invested, the more it can grow. Whether you're looking to build up your savings or grow your wealth, compound interest is an incredible way to make your money work for you. Of course, this strategy requires careful planning and patience. But if done right, it can result in a substantial sum by the time you retire, providing you with financial security in your golden years. The investment options we are going to look into are categorized based on the risk level. It's always essential to consider the level of risk associated with each investment option. With that said, the first category of investment options falls under safest compound interest investment options. These investments offer a higher level of security with predictable and consistent returns. For example, you can depend on stable compound interest investments, even during market fluctuations. If you're a low-risk investor seeking steady, reliable returns, this is an ideal choice for you. The second category is aggressive compound interest investment options. These investments are designed to maximize returns by taking on higher levels of risk. For example, they offer the potential for substantial gains, but also come with the possibility of significant losses. Aggressive compound interest investments do not provide stability or consistent growth, but can deliver higher returns for long-term committed investors. Now, let's dive into the list of investment options available that will yield exponentially to grow your wealth or achieve your goals. Under the safest compound interest investment options, the first best investment options to take advantage of compound interest is fixed deposits, FD. It is a popular investment choice among Indians, known for offering guaranteed returns. The process is straightforward. You deposit your money in the bank, which guarantees a specific return on your principal investment at the end of the tenure. Features of this investment options are on screen. Please pause the video and have a look to understand it. In short, FDs will yield around 6.5% to 7.5%, and it might be slightly higher for senior citizens. So with fixed deposit, how you can take advantage of compounding growth? For example, if you invest 10 lakh rupees in a fixed deposit for 10 years with 7.5% annual compound growth return, your money would be doubled by the time of maturity. The second safest compound interest investment option is debt mutual funds. Debt mutual funds are a type of mutual fund that invests in debt-related securities or fixed income instruments. These securities include treasury bills, commercial papers, corporate bonds, and certificates of deposit. Examples of funds in this category include money market funds, short-duration funds, and liquid funds. Features of this investment option are shown on screen. Tata Money Market Fund, Aditya Birla Sun Life Liquid Fund, UTI Low Duration Fund, and Bank of India Short-Term Income Fund are some of the key funds to mention against this category based on their absolute return yield. The next investment option against the safest compound interest investment option is conservative hybrid mutual funds. Hybrid mutual funds typically invest in multiple asset classes, with the most common combination being equity and debt. However, some hybrid funds also include investments in gold or real estate. The key advantage of these funds is that they offer the growth potential of equity alongside the stability of debt within a single fund. Conservative hybrid mutual funds limit their equity exposure to a maximum of 25%. Key features of this fund are shown on screen. So with mutual funds, how you can take advantage of compounding growth. It can be either via lump sum or SIP investment. As a lump sum, if you invest 10 lakh rupees for 25 years in a conservative mutual fund, which yields a 10% return yearly, The return yield alone would be close to a crore rupee by the end of 25 years. Let us understand the SIP behavior. With 10,000 rupees invested every month via SIP into the conservative hybrid mutual funds for 25 years, which yields a 10% return annually, the return alone would be near to a crore at the end of 25 years. Next safest compound interest investment option is post office time deposits. Similar to banks, post offices also offer fixed deposits, known as national savings time deposits. These investment options allow you to deposit your money for short to medium time periods. One key advantage of national savings time deposits is that they typically offer better returns than bank fixed deposits. Key features are shown on the screen. For further details, you can visit indiapost.gov.in website. Up next in the investment option is National Savings Certificates, NSC. This is a highly secure investment instrument offered by the Indian Postal Service and fully backed by the Government of India. Functioning similarly to a 5-year fixed deposit, the NSC provides investors with a guaranteed interest rate, ensuring predictable returns. This savings product is designed for a 5-year lock-in period, with the principal amount and accumulated interest paid out in full at maturity. The NSC's government backing makes it an extremely low-risk investment option, ideal for conservative investors seeking stable, long-term growth with the assurance of capital protection. Next up on the list is government bonds. These are sovereign debt instruments issued by the Government of India to finance critical national initiatives and manage fiscal responsibilities. These securities serve multiple strategic purposes, including infrastructure development, budget deficit management, and monetary policy implementation. Features of this scheme are shown on the screen. The next safest compound interest investment option is Sovereign Gold Bonds-SGBs. SGBs are innovative financial instruments issued by the Reserve Bank of India, RBI, on behalf of the Government of India. It's important to note that while SGBs track gold prices, no physical gold is held as an underlying asset. This unique structure allows investors to participate in the gold market without the logistical challenges of owning physical gold, while still benefiting from the potential appreciation and stability that gold offers as an investment. Features of such bonds are listed on the screen. The next investment option on the list is Kisan Vikas Patra-KVP. KVP is a premier government-backed small savings scheme designed to foster long-term investment habits, particularly in rural India. This secure financial instrument guarantees returns, doubling investors' money within a specified period. Backed by the full faith of the Indian government, KVP combines the benefits of guaranteed growth with the aim of promoting financial inclusion and a savings culture in agrarian communities. Features of KVP are listed on the screen. The Sukanya Samriddhi account, SSA, is a powerful financial instrument designed to empower the girl child in India. The SSA stands out as a strategic investment vehicle that combines financial security with social responsibility, making it an ideal choice for parents and guardians committed to securing a bright future for girls in India. Please have a look at the features. The Senior Citizen Savings Scheme, SCSS, is a premier government-backed investment vehicle tailored specifically for retirees age 60 and above. With its combination of safety, returns, and social purpose, SCSS stands as a cornerstone of retirement planning in India, offering seniors a reliable means to preserve and grow their savings in their golden years. Please look at the returns and taxable components on the screen. Last on the list under safest compound interest investment option is Public Provident Fund, PPF. This is a long-term investment plan offered by a government-guaranteed scheme mainly focused on retirement. This fund ensures a sufficient amount of money for retirement. Risk level, returns, and other features on the screen. we have covered most of the options under safest compound interest investment options. Now let's move on to the aggressive compound interest investment options. First up on the list is direct equity investment. Yes, one of the best ways to create wealth for your long-term goals is to invest in direct equities. There are many examples of stocks that have multiplied investors' wealth over time. For example, Reliance Industries had delivered a 144% return in the past 5 years. Bharti Airtel had a return of 365% in the last 5 years. Key features of direct equity investment are shown on the screen. As an alternative to direct equity investment, investors will look for equity mutual funds, which is on second in our list. Equity mutual funds primarily invest in stocks, but they don't concentrate your money on just one or two stocks. These funds diversify your investments across multiple stocks. These funds have numerous options for investment, including large cap, mid cap, small cap, multi-cap funds, etc. More importantly, professional fund managers run these funds. Each category of mutual funds returns is shown on the screen for your reference. Investors look for investment opportunities that can help them generate wealth, get regular returns, and/or save taxes. While there are numerous investment schemes available in the market, most of them offer returns that are taxed according to the income tax rules. This is where ELSS funds step in. Equity-linked savings schemes, or ELSS mutual funds, are tax-saving equity mutual funds. Look into the features of ELSS and take action. The next aggressive compound interest investment option is National Pension System. NPS is a long-term retirement-focused investment product. It mixes assets like equities, government, and corporate bonds. You can decide how much of your money can be invested in different asset classes based on your risk appetite. Features of NPS shall be verified on screen. Next up is unit-linked insurance plans with equity exposure. ULIP is a financial product that offers both life insurance coverage and investment opportunities. With a ULIP, a portion of your premium is allocated to different asset classes, such as equity and bonds, in order to build wealth over the long term, while another portion goes towards providing life insurance protection. Moving on, the next is real estate. Property investment is highly favored among Indians for its potential returns. However, it comes with risks and limitations. One major risk is the difficulty of quickly liquidating real estate, which may result in having to sell at a significant discount. Last on the list is aggressive hybrid mutual funds. These hybrid funds invest between 65% to 80% of their total assets in equity and equity-related instruments, and the balance 20% to 35% in debt securities and money market instruments. Usually, hybrid funds with a balanced approach are not permitted to take advantage of any arbitrage opportunities, even if the fund manager is certain to make good returns. Listing its features on screen for your purview. With this, we have covered most of the investment options available from which you can make use of compounding growth to build your wealth or achieve your goals. But many would be wondering, which is the best investment option for you? The answer to this question varies from individual to individual, as everyone has their own set of goals and risk tolerance. Here are some of the investment options based on certain factors. First, it's essential to assess your risk appetite. If you are a risk-averse investor, you should consider low-risk investments like government bonds, fixed deposits, etc. However, if you are willing to take higher risk, then you can opt for stocks or aggressive equity mutual funds. For those seeking market-linked returns, investing in stocks, mutual funds, NPS, etc. might be a suitable option. On the other hand, if you want to earn regular income, consider investments in bonds, corporate fixed deposits, or dividend-yielding stocks. In order to avail tax benefits on your investments, you can select from various investment options such as ELSS, NPS, PPF, SSA, SCSS, etc. Consider your financial goals and select the investment that best suits your requirements. For instance, if you want to invest for long-term growth, consider investing in a diversified portfolio of stocks or equity mutual funds. So in conclusion, the best investment aligns with your financial requirements and risk tolerance capacity. Understanding the risk associated with each investment option is crucial in making informed decisions about where to put your money. That's it for this video. In the next video, we'll delve into detail to understand the key concept that pushes you to invest. So, make sure to subscribe and hit the notification bell so you don't miss out. Thanks for watching, and we'll see you in the next one.